You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is Friday. It is noon Central. It is 1 p.m. Eastern. You know what's popping off in the world of vol? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you to join us after Vol Views for a fun partay, a little shindig we call Options Oddities. It's been a banger of late, man. So much crazy stuff going on, all the quantum stuff. I mean, Flowmaster was just getting into some quantum fun yesterday. We've been doing that for a while. Over there on Oddities, only one place to go to check it all out, theoptionsinsider.com/pro. That gets you past the velvet rope and the bouncer, who is quite mean, to get you in to the secret club. For Oddities, you get pro Q&As. Congratulations to Alan, one of our longtime pro members, winning the January Pro Trading Crate. Get your name in the hat to win the Feb Crate. Trust me, your options trading career is not complete until you've received one of these pro trading crates in your lives. Each one bespoke, each one cooler than the last. theoptionsinsider.com/pro is the place to go. You also get to come in and heckle us live in the live stream. What's more fun than that? Sometimes Dr. VIX floats around in there. The Flowmaster flows around in there. You can give them a hard time. All sorts of fun. theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on this fine, fettled Friday out here. First, let's go out to the hinterlands of Chicago, where we are joined once again by the once and future Dr. VIX, a.k.a. Mr. Russell Rhoads, now holding court over there at IU, corrupting young minds of the future. Mr. Rhoads, welcome back to the show, sir.
Corrupting young minds best that I can. And in fact, the Finance Club at Kelley has asked me to speak on VIX in a couple of weeks. I'm sure it will be standing room only.
All the kids.
So there.
I can't wait for that.
Can't get enough of that VIX. You know what they say? They love their Taylor Swift these days and their Pokemons and their VIX. Right? It's all up there in the hot things the kids love.
They're Vixies. They're all little Vixies.
All Vixies. They're going to show up with their VIX hats.
Yeah.
It's going to be cool stuff out there. And then that tinny voice can mean but one thing, listeners. We are joined from the Southern Volatility Mecca. No snow this time, I think, down there in Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. What the cool kids call the old OP. Mr. Pity, a.k.a. Mr. Meatball. Welcome back to the show, sir.
Hey, happy Friday. Yeah, I think it's like 75 here today. So the weather's nice.
Dang, it melted that dusting of snow you got, that once in a century dusting of snow. No snow for the Pitties, but you know what? Maybe we'll get some vol fun as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is, from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. Let's see what's lighting up the tape out there today, shall we? It's another one of those days, listeners, where if you don't like what the market is giving you, just wait 5 minutes. Of course, we did see some interesting, some might call it a bit of a Goldilocks jobs report. A lot of people waiting for that this morning. Seemed like we had some decent jobs numbers, unemployment rate actually falling a little bit out there. So seemed good. Market was kind of off to the races early, and then we kind of got a double gut punch there. Looks like we had the consumer sentiment survey coming out saying folks expecting a little bit more inflation. That tended to spook some folks and started to drift us down a little bit. And then, of course, these rumors now that Trump talking about reciprocal tariffs on all of our allies out there. So there we go. More tariff fun to end the week, which is exactly how we ended the week last week. And, of course, we kicked it off this week. Again, it was another kind of Monday gut punch to the market, 2 weeks in a row now. Last week was, of course, DeepSeek. This week it was the threat of tariffs. And we saw vol spiking a little bit earlier in the week. Similar trajectory to last week, then kind of drifting lower throughout the week, with the exception maybe of today. We'll see if we can get a little bit of teeth in this sell-off that's going on out there right now. Because right now, listeners, as we are kicking off the show, we are seeing the S&P firmly in the red now, off about 0.5%. The Dow off about 0.6%. The NASDAQ closing in on nearly a full percent, about 0.9%. And VIX cash hanging out at about exactly 16. That's up exactly a point from where it was this time last week. So the market's selling off, but vol coming in. Of course, we had a lot of that jobs data that was keeping vol a little bit frothy into the end of the week. That event risk is gone now. So we'll see if the sell-off we're seeing later in the session, if these rumors are true about reciprocal tariffs, if that can lift vol a little bit again, or if we're going to keep drifting back towards that 15 handle out there. Vol itself still hanging out pretty firm as we kicked off the show at about 100 exactly. Puts it up slightly, up about 2 points from where it was this time last week. And because we had our buddy Mr. Scott Nations on the show last week when he kicked off his new service this week, let's talk a little VOLI as well. VOLI 13.25, up exactly a point. Remember, we talked about it last week. It's kind of just straight at the money vol, just the facts, ma'am. No skew, nothing else, just a straight at the money vol measure. That also looking a little frothier, up exactly a point this week to 13.25. Let's go around the horn the opposite of the way we started. Let's go out to the Southern Volatility Mecca first. Mr. Meatball, sir, what is catching your eye out there in the vol market this week?
Yeah, well, we had initially vol kind of pulled back most of the week. We got an initial little pop on Monday, but it gave way very quickly, and I wouldn't be surprised if we close the day with the VIX down on the week. We've seen VIX, VVIX, volatility as a whole, just kind of pulling back. The market go from being in kind of Monday morning being fully backward to now being in a contango. And, I think that markets are telling us that, overreacting to these Trump tweets is a fool's folly. That's what I think.
That's the game we're in for the next 4 years. What is he tweeting today? That's kind of the game. It does seem like we're playing out a little bit of a pattern now. We get a little bit of a shock on Friday, a nice gut punch to kick off the week on Monday. Vol spikes, kind of drifts lower, and then the whole pattern repeats itself on Friday afternoon again. We are playing that out literally like clockwork right now. So interesting stuff out there. Mr. Rhoads, same question to you, sir. What caught your eye in a week where it seems like we're playing out the playbook from last week again?
It does seem like we're playing out the playbook from last week. We just need we need to declare I'm trying to think of who could we hit with some tariffs to scare a lot of people this weekend. Let's go after Greenland. We want to own it anyway. We may as well implement some tariffs against Greenland and Denmark. Yeah, I'm just sitting here waiting right now. Spot VIX and we'll talk about the curve. But spot VIX is a point discount to the front month future. When I was sitting here last week, it was $1.60 discount. Then all of a sudden I looked up and they were even with each other. So I'm keeping a closer eye, assuming that maybe we'll get some sort of Friday afternoon surprise out of those guys. What for the week that was, and Mark pointed out that we started out in some backwardation and then we're back to a bit of normalcy. The week over week look really doesn't tell you a whole lot about what happened this past week, but I do think that we've all gotten really, really smart with respect to just ignoring the president. I'm going to keep using this example for some time, but he popped up on one of those lecterns. He said interest rates should be lower, and the markets just said okay, and completely ignored him. None of those odds things or anything even budged when he said it. So he's the president that cried wolf, and it's caught up with him.
I mean, that's the least of the things he said this week. He said he wanted to put boots on the ground in the Middle East. I mean, everyone's kind of ignoring. You got to play that game a lot these days. You got to ignore a lot of what comes out of his mouth. Yeah. Otherwise, these markets would be roiling pretty much every day. 4 years of this, listeners. Strap in. And again, we said this last time, though. We said he's going to bring the vol, and then vol went to die. So is this just a short-term tempest in a teapot, to borrow our phrasing from our question of the week, or is this going to have legs throughout the year, and it's going to be, what did he tweet, what did he say today kind of thing? By the way, our chat pointing out that it is a Super Bowl weekend. Yes, you're right. So we're going to hear a lot of noise about the Super Bowl vol indicators. What does it mean for the market if the Chiefs win? What does it mean for the markets if the Eagles win? All sorts of fun. Our chat saying maybe we'll have a Super Bowl hangover on Monday, and this Monday won't follow the old playbook that we've been following for a while now, and just sell off aggressively on Monday, and vol will spike. Everyone will be just hungover and still gorged on chicken wings and stuff. Maybe that's the case. I think we could use a little quiet start to a week. I wouldn't be adverse to that. Well, let's see what's going on out here on the VIX futures front, shall we, listeners? And like we said, vol firming up a little bit this week, and we're seeing that play out in the curve right now. That front future, as we kicked off the show in Feb, was hanging out close to 17.25, puts it up almost 0.85 points, not quite a full point from where it was a week ago. March, about 17.87 when we kicked off the show, puts it up almost a half a point, about 0.47 from where it was this time last week. So kind of firming up a little bit in that front end, but nothing wild or crazy out there. And if you go all the way out, let's go all the way out to where everyone was freaking out a year ago on the curve, right? It was the October expiration cycle, bid up to high heaven for obvious reasons. We're not seeing crazy bids. It's that 1935. That might seem high to you, but given everything we're seeing right now, it doesn't seem that wild. In fact, given all of your end-of-year vol prognostications in our 2025 crystal ball contest, a good chunk of you said VIX is going to go out at the end of the year north of 20, in which case over 19 by October doesn't sound that wild. But interesting stuff out there. Mr. Meatball, we'll start with you, sir. Anything catching your eye on the vol surface this week?
Well, like I said, we started the week in, really backward, closed Monday in kind of a partial backwardation where the curve was in contango, but the VIX itself was trading above it. And now, we have a curve where the VIX looks like it, the VIX was below 15 this morning, and the curve is really pricing like volatility is going to subside and continues to price that way. If I was going to point out anything in the curve at all, the back end still looks pretty flat. August, did they just list August? Is that why it looks a little bit off? But the back end is really flat. That's about the only part of the curve that really strikes me as odd. From April to June, there's only about 45 cents different. And so, there might be a trade there.
Mr. Rhoads, same question for you, sir. Anything catching your eye in the world of the vol futures this week?
Yeah, and since you said vol futures, I get to slip a VSTOXX in there.
No,
so
that is not allowed, sir. I'm sorry.
Yeah, I'm not allowed to. Well, but it does relate to VIX. So there is a major election coming up in about 2.5 weeks in Germany. And right now, the U.S. markets are completely ignoring it, but the European markets, you've got a little bit of that Trump election thing going on with the German election, where you've got the first contract to expire after the election, the March one, continues to be at like a nickel or a dime premium to the April one. I keep waiting for a better opportunity to short March and buy April. I finally gave up and did it where I sold. My average cost right now is selling March at a nickel premium relative to April. I would have liked to have done a lot better on that. My point behind this, with respect to those that pay attention to VIX, which is pretty much everybody listening to this program, is I do think you're probably going to see, as that approaches, our March contract hold up relative to April. It's not showing up right now. It's like a 50-cent discount, or it's more than, it's right at a 50-cent discount right now. I do think that might flatten a bit, which is a little opposite of what we would normally expect. It also will probably give you a chance to put on a position that assumes that we have a normal term structure when we approach March expiration, which we probably will, barring major disasters around the world. So I do think that you just want to watch that relationship, and we're only a couple of weeks from March becoming the front month. I think it's going it might look a little flatter than people think it should, and the reason being is over in Europe.
Well said, sir. There is some stuff afoot. If you can lift your gaze from the domestic vol market, I know a lot going on here domestically, but if you can lift your gaze across the pond, there is a lot popping off over there as well. Was there a lot popping off in the world of VIX futures in January? We have the number in our hot little hands from our friends over there at OCC. The answer is no, listeners. January not bringing the heat, which is interesting because overall options volume, January brought the heat, up nearly 18% across the board. So that's pretty much a banger month. Again, over 1.1 billion contracts. We're starting to hit that B handle with regularity, which is wild. Talking to the Flowmaster, if you annualize January volume, we're talking 14 billion contracts this year, which is insanity. Talking 4x what the whole industry used to do just a few years ago. But futures not feeling that love. Remember, OCC mostly clears VIX futures. There's a couple other things sprinkled in there, but it's 99% VIX futures. That's down 8.6% in January, which again is kind of interesting. Also kind of flies in the face of the number that they were just talking about for the full year, because we have the numbers for the full year as well. And VIX futures volume was up nearly 8% on the year to about 60 million contracts. So up about 8% for the year, but then giving back about 8.6% in January. So no joy there on the VIX futures front for January, which is kind of interesting when the rest of the market was kind of rocking. We had some vol events you might have noticed. DeepSeek comes to mind in January. And yet, of course, we had that sell-off to start the year, and then the market's kind of rebounding from there. And yet, VIX futures just can't find the bid from a volume perspective, which is kind of interesting. You know what else is interesting? Our chat, we got Go Birds. Nichols, I know you're not from Philly. Are you really an Eagles fan, Nichols, or are you just whoever's playing the Chiefs fan? I got a feeling it might be the latter. But hey, if you're a legit Eagles fan, yeah, go Birds. Go for whoever you want to play. I know there's a strong contingent this weekend of anyone but the Chiefs. So if you're in that contingent, Nichols, let me know. But fascinating stuff. Let's keep on rolling into the land of VIX options, listeners. Is VIX options fascinating today? Is it out of the gate hot and spicy? And you know what? If you just looked at the ADV, you might think, yes, that ADV looking pretty spicy, looking pretty robust. 917,000 contracts a day. That's up 47,000 from this time last week. When you get north of 900K and we start threatening 1 million contracts a day in VIX, regardless of anything else out there in the market, that alone is an indicator that maybe you might want to sit up and start paying attention. Something is going on. The game is afoot in the markets, as the kids all say out there these days. So yeah, 917, nothing to sneeze at in VIX land. Are we threatening that today? Not quite yet, but we'll see. The day is young, 409 on the tape right now. So again, nothing terrible, closing in on halfway to that ADV. So we'll see what's going on out there. Before we get to this week's action, let's break down our proprietary top 10 VIX indicator, TM. Nobody come at me, not even SIBO. I own that baby. All right, let's go out. Let's go out to the top 10. What does it cost you to break into the top 10 today? It cost you 202,000 contracts. That is, dare I say it, respectable. By the way, you're hanging out 9-1 calls over puts right now in our proprietary VIX top 10 indicator. So for all of you out there playing the put game, I had some Feb 15s in the list. Those are apparently going the way of the dodo now, which, spoiler alert, I'm getting ahead of myself. Let's break down the top 10 here, listeners. Number 10, 202,000 of our old pal, the Meatball's favorite strike on the board, the Feb 60s. 202,000 of those bad boys to kick us off. So right away, we're right into it, listeners. No messing about this week. Number 9, 203,000 of the comparatively far more reasonable Feb 19s. You like those, listeners? 203,000 of those bad boys on the board. If maybe you want to split those uprights a little bit, 19's not doing it for you, but also not the 60s, allow me to present number 8, 210,000 of the Feb 35s. Number 7, 213,000 of the still fairly reasonable April 20s. So going out a little ways, buying yourself some time on that 20 strike. Interesting. Number 6, 214 of the Feb 23s, getting back up there a little bit. Number 5, we found Waldo, listeners, 240,000 of the Feb 17 puts. Man, the Feb 15 puts were lighting it up last week, not to be found in our top 10 this week. Number 4, 304,000 of the March 20s. Number 3, 334,000 of the March 60s. So again, right back at it. Remember we talked a week or two ago about that Feb 3060 against the March 3060. Obviously that March 3060 still open for size, and obviously still size open on the Feb 60s as well. Number 2, speak of the devil, the March 30s, 358,000 of those bad boys. And the number 1 size position in VIX options right now, still holding court. Again, the other side of that spread I was just talking about, 380,000 of the Feb 30 calls. That is your number 1 with a bullet in VIX land right now. An intriguing week. Let's see what the once and future Dr. VIX has in store for us. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, the floor is yours. What you got for us this week, sir?
I got some weekly action, not as much as last week. Last week was I had my pick of the litter as far as trades to talk about. Not quite the same, with the exception of Monday. Monday was a great day. I think almost 3 pages of trades to choose among. Let's talk about some that are just completely stupid and some that are great. VIX was up around 1961. This is one I don't like. Somebody sold 200 of the February 12th next week, 23 calls for 76 cents, and they bought the same number of 33 calls for 37 cents. They took in a 39-cent credit. They'll probably make money on this. But, you got a $9.61 potential loss if we get a volatility event. And I worry about things that are taking in that little a credit, because you only need one big loser to knock out, goodness gracious, 29 gains, I think, if I did the math right in my head. With VIX around 2002. A price that Mark Sebastian probably liked. Somebody bought 500 of the February 5th, 16 calls, and sold 500 of the February 5th, 17 calls. They paid $3.23, and they sold the other ones for $2.24. They paid 99 cents for this spread. If it's an exit trade, it has to be an exit trade. Just based on what I looked at volume-wise, if it's an entry trade, their maximum gain is a penny if we're over 17 at expiration. So if they were buying back on Monday a short call spread because they were worried about where we were going to be at expiration. They hurt themselves tremendously because VRO this past week, the VIX settlement was close to 16. But I have a feeling some portfolio managers said, get rid of that right now. And they got out of it at a terrible exit. I mean, at that point, you're better off just sitting on the freaking thing and seeing if you end up taking the dollar debit or not. So two trades I don't like. We got to find a trade I like. And this is not one. With VIX around 1815 on Monday, somebody did a butterfly. Call fly. They sold 100 of the 22 calls. They bought 200 of the 35 calls and sold 100 of the 45 calls. They did this using the February 12th options again next week, and they took in a credit of 25 cents. They're good as long as they're under 22. And then, if the world comes to an end, maybe they profit on the upside from this thing. But not quite understanding that trade with the risk reward. Why not do a call spread instead? Why are you using this structure based on the outlook? Then on Tuesday, I kind of like this one. VIX was at 1695, and here's a big trade, and we're talking about March, and when the weather's going to be much nicer. We're going to have March Sebastian weather in Chicago by the time this trade expires, hopefully. Somebody bought 6,000 of the March 5th 20 calls at $1.15. They sold 4,800 of the March 5th 23 calls for 78 cents. So basically, they're buying 5, selling 4. Let's call that $2.63 a spread. And that makes their break even on the upside 20.53. Now, between 20 and 23, they make 5 points for each point higher in VIX. And then above 23, they make 1 point for each point higher in VIX. So it's like you get a nice benefit for more likely prices in that low 20s. But if we get a true volatility event, they, up 40, 50, 60 or so, they're still making 1 point per VIX point to the upside. Wednesday was my wife's birthday. I wasn't allowed to look at the market, so I have no idea what happened. Thursday, yesterday, VIX at 1565. Kind of like this trade. Again, it's a small credit, but somebody sold 2,000 of the February 12th 18 calls for 41 cents, bought 2,000 of the February 12th 22 calls for 16 cents. They took in a 25-cent credit. The maximum loss on this one is $3.75 if we get a volatility event. So the dollar risk reward is a little bit more palatable than that first trade that you took in 30 cents and you might lose almost 970. And then nothing really exciting to speak of weekly wise today. And I just looked it over again, and there's still nothing exciting to talk about. But oh my goodness gracious, Monday, when we're having our Monday volatility hiccups, people are getting in there and being very strategic and using weeklies.
I love how, first off, you're a smart man. Do not watch the markets on your wife's birthday. That's a major
Thank you,
sir.
Smart move.
I also like how you said, I need to find a trade that I like, and then immediately profiled like 3 more in a row that you hated.
Oh, I know. I really couldn't find one that I was like, last week. And the one I talked about last week, I double dipped and I wrote it up on my Substack, and I got some really nice feedback about that one. And that was where they were buying 2 16 calls and selling 1 17 call. And what it did was it cost a little bit more, but it improved your break even by about 60 or 70 cents, if I remembered. Didn't find anything. When I saw there was a fly, because you don't see a lot of those using weeklies, I got excited because I was like, well, maybe this is something I can say I like, but I don't.
That's why we got excited with that wild iron condor last week. Something different in VIX land. Let's see if there's anything different out here in VIX options this week. Nothing super wild today, listeners. Like we said, about 409,000 contracts on the tape right now. The big dog today, 21,000 of the April 35s, followed by number 2, 20,000 of the April 18s. I'm trying to look and see if we got any vertical action Looks like the 18s went up against the April 17 puts. So we actually have a risk reversal. That's 20,000 for number 3 of the April 17 puts. Trying to see if all this didn't go up at the same time, though, against the 35s. The 35s do appear to be their own beast here, listener. Oh, actually, no, they went up the same time. So it looks like it's a risk reversal 20,000 times. So April 17 puts for $1.74, April 18 calls for $2.32. And then against all that, looks like they're probably buying 20,000 of the April 35 calls for 76 cents. So listeners, you got the April 1835 vertical and VIX going up against the 17 puts 20,000 times. You like that? 17 puts, if they sold those, probably bought. They sold those. That's an intriguing choice as well. I need to dig in. All this I'm showing right now is just a risk reversal. They're not showing the 35s against it, but those are clearly against it. Either way, listeners, that is our number one trade. You like that, listeners? You like 1835? Looks like they did that vertical for like around $1.60 or so, and then selling the puts. If they sold the puts for $1.74, they're actually doing that spread for a credit. You like that? Or does that give you the cold sweats selling those April 17 puts? You're getting the vertical for a credit, I guess. That's one way to do it. Or you like buying all that, in which case you're shelling out a boatload of effing premium for this bad boy. That's an interesting one. A number, so I lie. I say there wasn't a lot different today, but then we just found something a little bit different. Don't see a ton of bullish risk reversals in either style out here in VIX, at least not for size. Number 4, 15,000 of the April 24s, and number 5 today, also 15,000 of the May 20s. By the way, those went up for $2.38 as part of a spread, and I don't see the other leg of the spread here, but intriguing stuff. May 20s. Don't see a lot of May going up. Thursday, a little bit more paper on the tape, 607 to be precise. 32,000 for number 1 of our old friend, the Feb 15 puts, going the way of the dodo in our top 10 this week. Number 2, 22,000 of the March 21s. Number 3, 22,000 as well of the March 17 puts. Number 4, 22,000 of the March 17 calls. That has the whiff of our old pal doing the synthetic against a little bit of upside. It's all the same size, all in the same month. Looks like a duck and it quacks like a duck. It's probably a duck, listeners. Number 5 yesterday, 21,000 of the February 16 half puts. Going out to Wednesday, 669 on the tape. Not a ton of banger days from a volume perspective this week, listeners. The big dog, though, pretty sizable on Wednesday. 59,000 of the Feb 40s, 4 O's. And then number 2, 52,000 of the March 14 puts. Number 3, 49,000 of the March 45. So we're all over the place. Number 4, 46,000 of the March 17 puts. And number 5, 44,000 of the March 15 puts. Looks like we were definitely open on those March 45s. The rest is, we'll have to dig in to see. Tuesday, 449 on the tape. The big dog, about 25,000 of the March 18 puts. Number 2, 23,000 of the Feb 18 puts. Number 3, 21,000 of the Feb 35s. Number 4, 16K of the March 24s. And number 5, also about 16K of the March 25s. Monday was the banger day of the week, as we come to expect now. Again, playing from that old playbook. Pop the vol, crush the markets on Monday, let them drift higher in the markets, lower in vol the rest of the week, and then kind of wind up the clock, refresh the playbook back to page 1 to do it again on Friday afternoon. On Monday, 9:04 on the tape. The big dog, 63,000 of the March 15 puts. Number 2, 52,000 of the Feb 16 puts. Number 3, 47K of the March 17 puts. Number 4, 40,000 of the Feb 19s. And number 5, 39,000 of the February 20 calls. Mr. Meatball, another kind of wild week out there in VIX land, another week following the old playbook. Anything catching your eye from a VIX options perspective this week, sir?
Yeah, well, you mentioned that big risk reversal
you
today.
Like that?
It looked like they did that April 17-18 put spread versus the April 35 calls. And then Thursday, also no like massive orders, but there was a lot of volume. Biggest trade was the March 40 calls. And I kind of like this. They did the March 19-27 call spread. That was only like 76 cents. That's not bad. That's not a bad price for a hedge. I got to tell you, out to March, I don't hate that. Wednesday, don't worry, Russell, since you were out, I on assignment, I watched markets. Biggest trade was a call roll of the Feb 40s out to the March 45 calls, and then some size up March put trades. 20,000 of the 17 puts versus the 15 and 14 puts. Looks like some kind of weird ratio Christmas tree type of trade there. We also had some activity on, March we're starting to see some more movement out of Feb and into March. Tuesday, kind of the same story, rolling out of Feb into March. Biggest trade was a sell of the Feb 35 calls to buy March 50s. We saw that happen for some size, along with some just kind of random March 25s. And then Monday, which was our big crazy day, biggest trade of the day, all puts. Everyone was fading. We had one April 50 call buyer, but biggest trade was the March 15 puts, the Feb 15 and a halves, the March 17 puts. So the smart money was fading on Monday. Goes to show you they were right.
They were reading the same playbook from last week. It was like clockwork out here. I was digging a little bit while you were talking into this funky April, risk reversal / call it what you will. Do you like it selling the 17 puts, Mr. Meatball?
It's a little strange.
Yeah,
it's a little funky.
If they did it that way, they collected about 18 cents. I'm not sure I love selling those 17 puts, but you're getting a lot of juice for them. I can see the attraction, I suppose. If they went the other way, if they bought the strangle, then kind of sold the 35s against it, then they shelled out for it. They paid about $3.30 for it, which is also quite rich. But I know you and the Rock Lobster like yourself a good strangle in VIX. You like it, and then selling the 35s against, you like it that way better?
Yeah, I don't know. I don't think that 35 calls overly expensive. I would probably have sold a further out of the money put and bought a call spread instead of this structure. But maybe this is structured against something else that went up upstairs, right? There's a lot of times another side to the trade that we don't see. This could be against something in SPX. It could be against a over-the-counter trade. It could be against something that went up in the ETPs. We just don't know.
Mr. Rhoads, I see you have some thoughts on this. You like this? You think it went up for the 18-cent credit? You like it that way?
I don't necessarily like it. I was doing the math for you while you were trying to talk. But no, I do think it's a pretty decent trade structure that, gives you a bit of upside. So I've always liked those types of trades, regardless of what direction you're going in, where you're basically taking in credit with that 35 call to help pay for some things, and you don't have a big threat of getting hit on that part of the trade. I mean, it's only happened a couple dozen times since we've been paying attention to VIX.
Yeah, no, I'm not worried about the upside. Selling that 17 put kind of, I would probably roll that a little bit lower.
I don't know, man. We feel like we're in this really weird transitory thing with VIX where we can't decide whether we're in a high or a low volatility environment.
Yeah.
And because of that, I would be very comfortable putting on trades that are okay as long as VIX is above 16. I know we're below there right now, but it doesn't feel like we want to stay below 16 for very long on a periodic basis. Your biggest risk is probably just having settlement on a bad day.
There you go. Split the difference. Sell the April 16 puts. There you go. They're a little bit farther. I can maybe live with those. Even if you got to do this for a little bit of a debit, sure. So you do it for a little bit of a debit, but you're not just wearing it on those April 17. Maybe we'll put out a flash poll to our audience. You folks, listeners, at the end of the day, are the ultimate arbiters of all things out here. How do you like it? You like it the way it went up for, looks like a credit, but you're maybe playing with some fire on those April 17 puts. You like perhaps a lower put strike. Maybe you like buying a put farther out of the money in case something crazy does come to pass to hedge off your risk to the downside. There's a lot of different ways you could do it. This is certainly one. as we keep on rolling out here to the land of the vol ETPs, aka the product that's been given the meatball the fits ever since he had the temerity to launch a newsletter on it. This is SVIX. I do feel for you, sir. It's been a challenging period. This thing was kind of moving. It was, I wouldn't say predictable, but you could do a lot of setups with it. The liquidity was decent. The vol premiums were all right. There was a lot of things you could do with it out in SVIX. And it just seems like in the last few months, it's been just a extremely challenging period in SVIX. SVIX right now, listeners, 26 even, down about a third of a point. Today, we've been lamenting the options liquidity for a while. It ain't helping it this week. Down another 300 this week, back to below 7,000, 6,800. Below 7,000 contracts a day. It's kind of hard to get decent stuff off. Today, only doing 2,500. So if you're looking for that juicy liquidity, then you're not going to get it out there today. By the way, really quickly, like the April 16 puts are trading for about $1.05 out there. So they could have sold those and still done all right on that spread. I'm just saying, going back a little bit of callback there. But Mr. Meatball, sir, it's a challenging period out there in SVIX. What's catching your eye out there, sir?
Yeah, vol continues to kind of really bounce around. And, SVIX, is stuck in kind of this neutral where, can't seem to catch a bid and also doesn't really seem to fall apart either. Just kind of bounce between winning and losing. That seems to be its normal strategy right now.
Mr. Rhoads, I know you're usually all in on overriding a little bit of upside in SVIX. What is catching your eye out there this week?
Got to hit that button. That 26 price level is very much, well, first off, I got out of it. I got to brag a little bit. I got out of all of my SVIX last Friday and bought it back on Monday.
Oh, you bought it back.
Oh, nice.
I was like, and I did the UVIX thing that I normally do as well. I mean, it's not the best thing I've ever done, and I didn't do it in huge size. I already had a pretty small position. I just put the small position back on. Sold some 26 calls, so I might be out of it again. We'll see. I love it when we're right at my price on that one. I keep doing the UVIX thing, keep trying to come up with a way to improve on it, and keep monitoring what's going on in some of the other very similar markets. I did get lucky last weekend. We did have a what we'll call a mini volatility event, and UVIX was up on the open on the open Monday. Compared to the Friday close, it was up 13.75%. Doing the same thing in the front month future would have gotten you 8.24%. So I do really think that that there's something unique with respect to putting on a weekend volatility position with UVIX. I got to stop talking about it because people are going to start bidding it up on Fridays and it's going to cannibalize itself. I got to keep a secret.
You've had 2 good weekends in a row now, sir. So
I know. I feel like I ought to just quiet. I always had an aversion to the lottery. And years ago, it was like $1 billion or something. And my wife said, go in there and buy a lottery ticket. And we won $150. I will never, ever play the lottery again. I'm ahead. And I will never play the lottery again.
That's statistically you're correct.
I am way the heck ahead on that one. Whenever I'd see guys at SIBO buying lottery tickets on the floor, I'd say, hey, or at the store, I'd say, hey, give me $1, and they'd give me $1, and I go, you lose. There, you played the lottery.
Did you hear about this group in England that does this lottery arbitrage, Russell?
Yeah. Yeah,
what did you think?
Familiar with it.
It's a really interesting math that they run.
Yeah. No, when it reaches a certain point, and there are some other gambling type institution, the slot machines that will pay off with really big numbers. When that number hits a certain number, it makes sense from a trader standpoint to start
gambling.
Yeah. And it's the same thing. It's the same thing with the lottery as well. It's the same thing with edges and volatility as well. And that's why, we see so much crowding in on the short side, because it just keeps working until it doesn't. And unfortunately, it's worked so well. I think it's suppressed VIX, and it may have suppressed VIX to the point where it's not a really good hedging instrument anymore. I talked to some traders earlier today about that basically focus on VIX and VSTOXX, and that came up twice, that people don't want to use it as a hedge anymore.
Ah, yes, the old British lottery arbitrage. How many times have we talked about that here on the network? I mean, it's kind of old hat to us.
Not enough. Not enough is my response.
The lottery arb in England. It's good stuff from what I hear.
Love it.
Let us know, listeners, if you want us to roll out a new show on the network all about British lottery. I probably could fill some time talking about the juicy arb over there across the pond. Is UVIX looking juicy? Looking slightly juicier, as Mr. Rhoads said. He's had 2 good weekends in a row now on his secret UVIX weekend trade. After a long period of kind of nothing to kind of death by 1,000 cuts post August 5th, had a couple of good weekends in a row. So again, UVIX, a different beast when it's around 30 than it is back, sub 10, let alone sub 5. 28.70 right now, up about 0.4 of a point. Again, the issue with SVIX kind of also beleaguering UVIX, that the volume is not quite there. Only 11,000 contracts on the tape. That's not even halfway to the ADV, which is also cratering at about 27,000 contracts a day, down another 8,000 on the week. So UVIX putting up no numbers out there this week. Since, our UVXY friends are floating around out there, we'll get a little bit of UVXY love out there as well. 1875, up about 1/4 of a point from last week. Today, again, the one argument in its favor, listeners, it puts up some numbers, 91,000 contracts against an ADV of 102,000. So the liquidity is there. It just doesn't have anything else going for it. But if you if you want tighter spreads, I can't fault you. Who doesn't want tighter spreads? Then maybe UVXY is your huckleberry. And rounding out our vol ETPs list, listen, let's go out to VXX, 43.15 right now, up about 1/4 of a point. So kind of treading water on the week. 30,000 contracts today. That's against an ADV of 35,000, which is actually up 1,000. So VXX, one of the few major vol ETPs to actually gain some ADV this week, which is kind of interesting. So VXX not suffering from the liquidity concerns that are maybe beleaguering some of the others. Mr. Meatball, anything catching your eye out there in the world of either UVIX or UVXY or your beloved VXX?
Yeah, I mean, they were down this morning. They're up today. Not a ton. UVIX did have, I haven't been on since it had that reverse split. Since reverse splitting, it's just been kind of slowly. It's had these nice little pops, but then has dropped. Its low post split is like 26. Thought it was going to break that today, and then decided the market decided to sell off. But implied volatility on these instruments is not very high, given how much they're moving around, which is maybe the one piece that's kind of interesting. And volume in like VXX and UVIX continue to rise at the detriment of UVXY. UVXY over the last few months has slowly lost volume, and UVIX and VXX have picked up a chunk of that.
I wouldn't mind seeing UVIX take the crown. Right now, still UVXY north of 100K a day. So UVIX has got a wall to climb to get there, but it'd be an interesting trend out there. I know Mr. Rhoads really loves himself some VXX, so we won't belabor that point. A lot of single name vol popping off this week. Check out, of course, the option block and all that other fun for a little bit deeper dives into that, including big names, Palantir, Spotify, Alphabet, really screwing the pooch. Even got into that on Options Bootcamp this week over here. Some folks writing in about that. Chipotle this week. So if you're looking for single name vol, it is there. Disney on Wednesday. The dumpster fire, that is Ford. We'll get into that probably a little bit later on oddities as well. Some aggressive overwriting going on out there in Ford, and a whole bunch of other fun. Check out the website as well, theoptionsinsider.com. Click on the Options News and Articles tab for all the free earnings vol reports, because we like you folks. It's all there. Dare I say it, it's the best earnings vol data in the biz, and it's free. Can't beat the price. Check it out on the website. As we keep rolling, let's do a real quick volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Vol Review. Right now, you folks are weighing in hot and heavy on our question of the week right now, which is, what is the impact of these tariffs? How long is it going to last? Is it a tempest in a teapot? Is it going to be through Q1, through Q2, or through Q3 and beyond? Right now, our audience is kind of evenly split, about 31% saying it's going to be a tempest in a teapot, 25% saying it's only going to last through Q1, and about 22% each for Q2 and Q3 and beyond. So get over there if you haven't already and make your voice heard at Options. But I wanted to get to this one really quick. This one came in right before the show from Beers. As actually his Twitter handle is out worthless. So I'm guessing he's hoping his premium he sells goes out worthless. But he said, hey, here's one for Vol Views. And he writes, RIP RVOL. And he includes a link to a paper over there on SIBO. And the SIBO paper is called Consultation Results Regarding the Cessation of the RVOL and EVZ Indices. This came out a few weeks ago in January. And they say SIBO Global Indices conducted a consultation with members of the financial community. Hey, they didn't consult me. Regarding the cessation of the SIBO Realized Vol Index, ticker symbol RVOL, and the SIBO Euro Currency ETF, ticker symbol EVZ. Two tickers that if I had to go back, I don't think we've ever, maybe RVOL once or twice has snuck into the conversation, but that's it. And we've never talked about EVZ. This is my favorite part of the circular. The consultation closed on January 3rd. No responses were received. So nobody gave a crap that RVOL and EVZ were going away. So as a result, surprise, surprise, these two were delisted effectively as of January 27th out there. So as Outworthless says, RIP to RVOL, the RVOL 3-month, 6-month, 12-month, and EVZ. Again, not indices that we ever really used or talked about, but intriguing perhaps nonetheless. Mr. Rhoads, in your research, did you have a lot of use case for RVOL, and are you perhaps upset that it's going the way of the dodo?
No, I didn't have any use for RVOL. I mean, I would calculate my own realized volatility versus what the market was saying. I also like to make adjustments for days off and some other things. So I always like to calculate my own. I do think there's always, when they do things like this, there's always something going on in the background. And I know they have been talking about launching some trading products on dispersion. And dispersion relates very closely to realized volatility, which just makes me wonder if shutting those guys down, or at least that one, has something to do with some of the other volatility products that they're thinking about launching. On the one that was based on the euro currency, the options on the euro currency ETF, that's what I believe that euro currency one was based on. It really had very, very little price action at all. And because and the currency in general rarely has price. I mean, it rarely is volatile. So, I assume that's why nobody commented on it. I wasn't even aware of it. If I was aware of it, I would have written long, drawn-out reasons to keep them.
Oh, that's funny.
You'd have been the one defender. Mr. Meatball, are you going to pour one out for RVOL and EVZ, sir?
Yeah, and Mark, can we discuss something that happened in the last week that made Russell's life just enormously more difficult going forward?
Sure. I always love when things make Russell's life more difficult.
Move done by a corporate executive in history. And I'm pointing at you, Jack Dorsey. This is the
XYZ
ticker symbol change of SQ to XYZ, thus subsequently ruining every single one of Russell's academic examples going back 20 years. What the heck?
Yes.
I did not know that.
Yeah, it happened a few weeks ago, Mr. Rhoads. I forgot. I didn't want to tell you and break the bad news.
It didn't ruin my year. It didn't ruin my life. It ruined everybody that works over at OIC's life.
Yeah, because
that's where all the XYZ examples. It would. And what Mark is referring to. And sorry that we're really deviating today, but Mark, Sebastian, and I do that sometimes. Back in the day when Institute, we weren't supposed to talk about real stocks, so we would always use XYZ. And my running joke was, if anybody ever grabs the ticker XYZ, I think I'll just quit my job because I'll have to redo so many all of my presentations. Luckily, I don't. I'm beyond that. So, but there are some people that I did not. I was not aware that XYZ was now a ticker. Yeah. I'm just glad he didn't do it 20 years ago.
Yeah, the regulator should have stepped in on that one. That's just a slap in the face.
Right.
A slap in the face. Those poor folks at OCC, they're so compliance restricted, and now they have to redo everything.
I know.
God forbid have to go with like ABC instead of XYZ.
Yeah, probably. That's probably taken too. I'll have to go. That's probably taken. Man, yeah, they'll have to redo everything now. That is a rough one, listeners. As we keep on rolling, it is time to roll out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, coming into the end of the show here, looks like this sell-off, like we said, might be gaining a little bit of steam earlier in the show, and that is indeed the case. Dow off about 0.9%, S&P off almost 0.85%, NASDAQ off fully 1.25% now, and our old pal VIX cash popping north of a 16 handle now, actually up to about 16.29. Why do I say that with a smile on my face, listeners? Because guess who was at 16.35 in the crystal ball? That's right, your boy, the host of said program, knocking it out with the crystal ball. I felt bad for Brian Overby last week. He was 0.01 away. But no miss for me this week, listeners. 16.35 is a winner chicken dinner out there. It was myself, it was Scott Nations, and Dr. Vix on the program last week. Scott dodged it. He just plugged his upcoming data service, which I believe went live on Monday. Check it out over there at Nations Indexes. And Russell was feeling more juice at an 1847. So it means I get the bullseye, which means I get the fun, the dubious honor of going first out here this week. And you know what? I think we might be due, might be poised for a little bit more juice. We know on Monday we will be if you keep playing from the old playbook. Will it persist throughout the rest of the week? That is the question. I'm going to say yes. I'm going to say 17. I'm wrestling with 25 and 15. I'm going to say 25. I was going to say 15, but I dialed it up. 17.25 for this time next week. And Mr. Meatball, you didn't get to play last week, so you get to go next. Where are you feeling for this time next week, sir?
I'm going to go 1441.
Oh.
Going for a vol collapse.
Oh. Interesting. What is the scenario you think that's just killing all the vol? Just amazing earnings?
I think China and the U.S. will put off tariffs.
Oh, make some peace. Make some peace on the trade war front. Okay, that would certainly do it if that came to pass out there. Unless we start putting boots on the ground in Gaza Strip, then all bets are off. Mr. Rhoads, what are you feeling for this time next week, sir?
I was going to say, you're playing me off before I get to do my guess. I'm going to go with 1647. I know I was talking about being at higher levels, but and your guesses are locked in. It's a 3-day weekend next weekend.
That is true. That is true. Yeah. I always neglect the calendar, the extra trading day there.
I know you do, and I don't help you.
That's a problem, putting out so many shows. But you're right. I'm still going to stay there. Maybe I should have gone 17-15 in hindsight. But you know what? I'm a man of my convictions. I have the bullseye record to prove it here on the show. Anyone wants to come at me, they can come at that out here on the show. Listen, adding another notch to my belt, another arrow to my quiver this week, listeners. Let's see in the chat. They're getting their predictions in now. If you're listening in the chat, stay tuned. We'll be back immediately after this show for a whole bunch of options oddities fun. So that should be a good one. A little bit of an early bonus show for you folks out there. If you want to get in on that action, theoptionsinsider.com/pro is the place to go. Mr. Meatball, sir, where should they go if they want more meatball-y goodness in their lives?
Go to optionpit.com and follow me on Twitter at optionpit.
And you should put some branding there. Like, you want to become OP as an options trader, come to the Option Pit. How about that? Free branding.
There you go. You can write my ad.
Look at that
Mark.
gold I'm handing you for free.
Indeed.
Become OP, listeners. Head on over to the land of the pit, optionpit.com.
I think OP has already been taken by Naughty by Nature, Mark.
Well, that's an extra P. But you're just chopping one P off. You're going straight OP. Straight to business. All right. I like it there. Optionpit.com. You, too, can go straight to business. Do some vol learning, maybe some trading, maybe a little SVIX, maybe a little bit of the Rock Lobsters, Flash 5, all that goodness. Get into land of the pit now. And Mr. Rhoads, what can they find on your Substack these days, sir?
On the Substack, just keeping up with earnings. We're coming to the end of earnings. We got Coke, Cisco, Airbnb, and mRNA, Moderna next week. If you happen to be in Bloomington, Indiana on February 18th from 6 p.m. to 7 p.m. in the Psychology Building, room 100, I will be talking everything VIX.
Go heckle them in person, listeners, if you're going to be around IU sometime in the next week or change out there. Check him out over there and his Substack as well, Russell Rhoads, 2 S's, 2 L's, RHOADS. That's going to do it for us on the on-demand side. It's also going to do it for the network this week. If you're hanging out in the pro, back instantaneously with some options oddities fun. For the rest of you, we'll see you back here on Monday for the old OB, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.